What's good, everybody? Welcome to another episode of Cheef and Chart. It's your man, Don Bucks. This is brought to you by Rap and Dough, the home of money conversations. This particular series, we talk about options trading, which is one of the solutions to closing the wealth gap. So, if this is your first time tapping in, y'all know we talk about these charts. Well, I Cheef the finest. So hit the notification bell and the subscribe button. This is your first time tapping in. Yeah, this episode is still Blue Dream. We're still Cheef and Blue Dream. And I guess the subtitle would be Averaging Down /in. And I kind of been talking about this over the past couple of days because that's what I've been doing with my plays. But yeah, so that's what I've been doing. Before I get into that, did y'all see what happened to the weed stocks today? I mean, it is fitting to talk about the weed stocks since we are on Cheef and Chart, right? The weed stocks went crazy because Biden, I mean, it's about time. Biden came to the table and saying how they want to throw out any charges anyone may have caught federally, but they also saying nobody should be locked up in local jails for weed either. So when that news came out, I think it came out at the end of the day, but Canopy Grow went crazy, Tilray went crazy, went up about 20%. Yeah, and it's interesting, man. I was having this conversation. I was like, yo, weed legal like a mug, right? What are they going to do about all the people that's locked up for weed? Here they is selling it. They finally figured out how to tax it, right? Because that's what they did with the liquor. Figured out a way to tax it. Now it's legal, right? Put some laws on it. But they figured that out with the weed finally. Now the weed is legal. So what about the people that's locked up for weed? So it's crazy. We was just talking about it, but now, he brought it to the table. It's official now. So we'll see how long that takes. But these charts, if y'all was tapped in yesterday, y'all know the SPY was going through a momentum divergence. And let's see here, make sure. Hopefully y'all can see that. But yeah, the SPY was going through a momentum divergence because it had shifted in market structure. Once this test failed, it tested this resistance and went through, which created a change in the MACD. It gave it a new high. So we're looking for momentum divergence to take. And here it is. Here's the weakness that we are looking for in this momentum divergence. So I caught some weakness yesterday, but some more weakness, as you can see, came in today. Hence why I named this averaging in and averaging down. Because when you buy a contract and it goes against the direction that you wanted to go in, the value of your option contract becomes cheaper. It loses value. So that means if you wanted to buy another one, it's going to cost that cheaper price. So now if you buy another one, when you add what you paid the first time with what you paid this time, and then you divide by 2, that brings your total average price down. So that's why they call it averaging down. So that's what happened. That's what I've been doing with my stock. And I've been explaining to y'all that the stock that I'm playing is in opposition to the SPY. Now, the reason why we keep our eye on the SPY is because the SPY is a representation of the overall economy, the overall market. So if the SPY is up, a lot of times out of 10, the rest of the market is up. And the reverse is the same. If it's down, the rest of the market is down. So the stock that I'm playing is in direct opposition. to the SPY. So if the SPY is up, mine is down. The SPY is down, mine is up. So here I'm watching the SPY to see what mine is doing. So if this one is showing a momentum divergence to the upside, mine should be showing a momentum divergence to the downside, right? So we have a new low in the MACD, right, with this strength right here. So that's the momentum divergence to the downside in mine. I'm looking for this to reject tomorrow, because if it doesn't, I mean, that's what the signs are pointing to. We have a resistance level here, and we have a momentum divergence. So that's all we can do, is put the odds in our favor, right? And high probability says that this is going to go down. Sometimes it does, sometimes it doesn't. But if it doesn't, you have to have some safety measures in place mentally before you even take the play. Where are you getting out if it goes against you, right? If this goes against me, I'm getting out if it goes past yesterday's low. So yesterday's low, yesterday's high. Yesterday's high was here, right? Because I'm playing for the down. That'd be too much strength for me if it goes beyond. I'll put it slightly beyond yesterday's high. So if it goes beyond that, that's too much strength for me. I'm out. My edge is gone, right? That's my safety measure. So I'm positioned for puts here. I've been positioned for puts for the past, well, since yesterday. But this is part of managing your trade once you're in it, right? So let's look at it. So this is what happened. So yesterday I was doing the same thing. So at the end of the day, I averaged down and I took profit, right? And then I got back in because the parameters were still the same. We had a fresh new low in the MACD. I'm buying more puts. So I bought one at the end of the day for $95. This morning, it showed some more strength. So I'm like, all right, I'm buying into this strength. It's a momentum divergence. So they were $80. So this plus this brought my average price down. It came down some more. I bought another one. So I'm bringing my average price down because, first of all, I'm not outside of my emotional threshold amount. Secondly, I still see that the parameters haven't changed. It's just showing more strength, right? That's what I'm banking on. That's what the odds are saying. So as it started reversing, going in my direction, to take some risk off of the table, I sold one for $1 more than what I paid for it, right? So I took some risk off the table and I made $1, right? Then it went up some more. Then I sold the other one for the same price I paid for it. So, but while I was buying those contracts, I locked in a lower price, right? Because guess what? Now I got that lower price. It came down some more and I bought another one. Like I was in and out of it, like bringing my average price down, right? So look, bought this one for 71. It started going in my direction. So what I did, take some risk off the table. Sold one for 79. So that was $2 more than how much more was that? I forgot what my average price was. I think my average price was around 77 or something like that at this point. So when I sold this one, it was like another $2, right? But I'm still locked. I'm still holding one and still holding one. But now that one has an average buy price of something. I'm gonna show you. Hold on 1 second. Now look, my average buy price is $70 now. So all of that, it started at 95 this morning, but me averaging in and selling them, taking risk off the table, I've still held one, so I can still hold on to my average buy price, which is coming down. It started at 95. So at the end of the day, I only had one left for $70, worth $70. It came down some more. It was showing strength at the end of the day. So now they're worth 63. So I bought one. I bought another one. So I forgot what my average price was before I bought this one, but it brought it down to 70 where it's at now. So that's part of managing your trade. And the only, like I said, only reason I was doing that, I'll try shit, is because I wasn't outside of my emotional threshold amount, dollar amount, and the parameters are still the same. And let's go over those parameters again. It dropped below this support, and we thought it was going to retest, because usually regular price action, once it falls through a support, it tests it because now it's overhead resistance. But it just kept going. But it's testing this one. So here's the pullback that we're looking for. This is where we get in. We have the momentum divergence, downwards momentum with a green bar. So down with up, that means it's a diversion. We want to go where the momentum is going. So this is where we position for puts. We want to see how much strength it's going to have. So we go to our trading time frame. I use the 2 hour. As you can see here, we got 1, 2, 3 bars. 3 bars is usually look for a pullback after 3 bars. Y'all know that from previous videos. Look at this: 1, 2, 3 pullback. 1, 2, 3 pullback. 1, 2, 3 pullback. So in any direction. So look, even to the down, 1, 2, 3 pullback. I mean, it doesn't necessarily have to be 3. It could be 2 big ones. Pause. So I'm looking for this to retrace. This is the strength. We couldn't see these bars in that one daily bar. So this is what's going on in that daily bar that we was just looking at. So these 4. So I'm looking for this to retreat. It might go up a little bit tomorrow, but I'm thinking it's going to show a tad more strength before it collapses. So what I'm looking for is, I'm going to take some risk off the table once the price comes back to 70 or 70 something, like right here. When it comes to 70, because it's at 62 now, I'm gonna put in an order to sell one at 70. So just take that risk off the table and then let this one run. And hopefully it's in profit by the end of the day. If not, hopefully it's break even, almost close to break even, or small loss. And because as you can see, we only down $16 on this play. So hopefully it's in profit, break even, or a little, you know what I'm saying, a little bit of loss. And then I'll just, because tomorrow's Friday and I don't have that many days left. I have 8 days left on this contract. So you got to count tomorrow. So that'll make 7 days left. Saturday, Sunday, Monday. It's too risky because you only want to hold the contract for like half of the duration. And when I got it, I think it was today. I think it was like only 8 days. So I can only hold this job for like 4 days. Feel me? And 2 of those days is going to be the weekend. And then tomorrow is Friday. So that's 3 of those 4 days right there. So it will have to be popping by Monday. And I don't know. We'll see tomorrow. We'll see how I feel, how things look. You know what I'm saying? But that's what we got. Always remember we position it for the later time frame trend, but we drop down to our trading time frame to position to get our entry. Because you can't see, this one bar represents all day. So you can't even possibly see a proper precise entry in that one bar until you drop down. Now you have the 4 bars that represent that day. So you can see the integrity of that bar. You know what I'm saying? You can see all the parameters around that bar if you drop down into a trading time frame. So I see this showing some more strength. Maybe it's about right here. It's going to test this before it goes down. That's my synopsis. That's what I see. We put the odds in our favor, and that's all we can do. So till tomorrow, it's your man Don Bucks. If you haven't already, make sure you hit the notification bell and the subscribe button. And always remember, ain't no competition